Louise Bedford here, your host of the Talking Trading podcast. This is how traders excel. I wanted to give you an idea about a story that happened to me a few years ago. My daughter and I were in Fiji. She was learning to swim, and it was one of those beautiful pools with the sand that graduates slowly down into the deep pool. She ventured in, and then she'd look back at me and come back to me. And then she'd ventured in a little bit more, and then she'd come back to me. And within just a few days, she was swimming in the ocean like a little fish because she had got her confidence in those very early phases. And around about the same time that we arrived, another couple arrived, and the dad took his child, who was roughly the same age as my Ash, about 3 years old at that stage, and the dad threw the kid in the deep end. Straight out. No graduated, this is how we do it. No developing of those skill sets. No, the kid went straight in the deep end, and the kid screamed and screamed and screamed, and for the entire holiday, that child never ever managed to swim. Now, I have to ask you, what are you doing to yourself in the stock market? Are you throwing yourself in the deep end, giving you absolutely no chance to float, to feel your way, to develop those basic skills? Or are you gradually building up your education to improve your skill set so that you can swim like a champion? Now, to talk about this very topic and many, many other things, I'm inviting Rob Roy onto the show. Rob, it's fantastic to see you. Tell me what your thoughts are about a throw yourself in the deep end approach versus a graduated, gradual approach about learning about trading.
Well, thank you so much for having me on today. It's wonderful to finally get together and catch up with you. So as far as trading, deep end versus gradual approach, I know different people take different opinions to it. For myself, I'm a believer that if I'm going to do something, I'm going to do it. I don't think about it. I don't take the time with it. I am pretty much a dive right in and get it done, because I believe if listen, you're going to go on a diet and you're going to get rid of everything but chocolate. Well, okay, it may not quite work the right way. Maybe better off to just rip off the Band-Aid and do it all at once. And I think it's the same thing with trading. I really think if you're going to commit to it, you need to commit to it.
Isn't it interesting? Different approaches. And I think you've got to find the right thing for you. Now, let me introduce a little bit more about Rob, because this show is actually going out to Rob's podcast as well. Now, Rob is the host of the Stock Market Millionaire podcast, which is a fantastic podcast. And I like the way that you set your podcast up, because you talk about it as being a podcast for those of us who think differently about the financial futures markets. And about their futures. So Rob is a veteran trader. He has over 2 decades of trading experience. He's also a professional speaker and a trader of equities, futures, options, and e-minis. Now, there are so many areas we can go into today, but there are commonalities between the way Rob approaches the markets and the way I approach the markets. And we're going to discover those today and discover differences as well. Now, Rob's website is wealthbuildershq.com. Now, Rob, what have I forgotten to mention about your background here?
Oh, no, you can keep talking about me all day. I'm okay. I appreciate it.
Bring on the Rob fan club. Now, for those of you who are listening from Rob's network, I'm Louise Bedford, the host of Talking Trading, and my website is talkingtrading.com.au. Now, I've purposefully gone back through your resources, Rob, and I've found some things that might be controversial for us to discuss. Now, one of the things is you say that you can start off trading with $1,000. Tell me about how somebody with zero experience can start with $1,000.
So there's a couple different things here. When you look at how people invest in the market versus trade, when we look at trading requires a shorter period of time than an investor's mindset. So I don't need this large lump of cash in order to be able to start generating some potential income from the market. how do we do that? For us, it's primarily options. I trade all these different vehicles, but my focus is equity options here in the US. To me, it's a very liquid market to trade. I've traded futures many times in the evening, right around the Australian Open, which is about 8 p.m. Eastern time here in the US. I trade the E-mini futures, but I really do like the options themselves. I just did a training today with one of my groups of students where we talked about, ironically, the topic was how to trade with a small account. And so it's great that it's fresh right on mind from just 4 hours ago this afternoon. But, when we look at an option trading, you don't need to be the person that trades NVIDIA with a $30 option or a $20 option. You could be trading Roku for $3 or $4 for an option, which means one contract is $300 or $400. You don't need a lot. And Roku moves $4 a day between high and low. Let's say you don't pick up all of it. You just get a small portion of it. You get $2 of that $4 move every day or for the day. That $2 move, if you have an option with a 70 delta, you're looking at $1 to $1.40 you're going to make on that option. On a $300 investment, you're looking at 30% rate of return. So you can do this with a very small amount of money. I've had students that do it with just $500. Have traded and worked their way through the process to learn this system inside and out. And that's really what it comes down to is, can you find a system that fits your risk profile? For me, it's options trading. I don't do crazy 8-legged spreads, the upside down Flint rubble bubble cake spread. I don't do any of that, right? I'll do credit spreads and condors and such, but my heart for trading now, for short-term trading, my day trades, is directional option trades.
Okay, so in terms of this question, I have to say I encourage people to continue saving. I think saving is something that is so underestimated in terms of wealth creation. And if you're getting started with a lower capital amount, I would usually suggest people get involved in an ETF, so an exchange traded fund. And what they do is they compile, like a little index, all of these different instruments, but you can trade them under the one trading platform. So you can get something to duplicate the S&P 500 or the NASDAQ, for example, where you're not trading all of those individual stocks, you're trading the one entity through an ETF. So if you've got limited capital, that's what I'd suggest. In the Australian market, options are a little bit trickier because of the volume. I've written a book, it's a best-selling book called The Secret of Writing Options, but I don't encourage people to get going in the options market straight away. I find that there are many variables affecting that options price, and unless you've already cut your teeth in a trading method that suits you, something that's a little bit simpler, such as equities, sometimes it's very easy to trip over your own feet. But this is good, Rob, because I like disagreement and I do want to hear your views. I want us to disagree. It's a good thing. Now, I want to talk about some of the unconventional lessons that you believe should be brought out into the public. You've told me that coaches often go about this all wrong when educating in terms of financial mindset and in terms of trading. What are some of the crucial yet overlooked lessons that you've discovered on your trading journey, and what should coaches be teaching?
So great question. And it is true. I have been through many masterminds myself. I am in 2 different masterminds that are stock market related now, have been for almost 10 years each. And I think that, what we do inside of these masterminds, including the ones that we have, are very different from the way most coaches approach what they teach. One of the companies that I taught for, we got a manual, and this is what you had to teach. You went through this process. And the problem was some of the strategies really weren't things that you could do well. Dividend capturing, and that's great. If you have enough cash, dividend capturing is awesome. But the 22 cents that AT&T pays these days, that really isn't going to make much of a difference in my life for the 14 shares someone might have in their account. So I think a lot of coaches focus on a singular strategy, and they think that that is the, handed down from the heavens, and this is the strategy that everybody is supposed to trade. I think if you cannot first define your own personal risk profile and risk tolerance, you will not win at trading. You will lose trading, investing. With a broker, it doesn't matter. With a financial advisor, you give them all your money for them to invest for you, you will not be successful. So one of the major ones is making sure that you define your risk profile and not try to fit you into a box of this is what that coach teaches and that's what you have to now trade.
I love that answer. I can't find anything to disagree with you on with that one at all,
Being from
Rob.
New York, I'm good with disagreement, by the way, so I'm
Yeah,
okay.
yeah, yeah. I'm liking this. We do need a little bit more of this in our lives, I think. This is also where people learn because there's more than one strategy that you can follow in the markets to make money. So that alignment with your own goals and your personal values is key. The thing that I think a lot of coaches don't look at is that they don't talk about the importance of a trading plan, something written in the cold light of day to govern your entry, your exit, and your position sizing. Now, that is the core of everything that I'm about, and my business partner, Chris Tate, is about as well, who's another best-selling author. So that adherence to the trading plan is sadly missed by so many coaches, and it's something that I really like to emphasize. Now, I want to talk about your family and friends. Now, Rob, I know that your family and friends advised you against trading and that it was a little bit tricky because some of this it resonates so much until my husband saw the money coming in. He was like, what do you want to do? What are you talking about? I have no idea why this is a good idea. Funny how money acts as an anesthetic. Now, I would like you to share some of the turning points that helped you stick to your path, and how did you handle the adversity being flung at you from your family and friends?
So it's funny, the first people I told were my friends. My wife knew nothing about it. If I go to a couple seconds of the backstory, one of the gentlemen that worked for me came to my office and said he had to quit because he wasn't making enough money. And I said, no, I don't want you to quit. I'm going to get you a raise. You're the best guy I've ever had work for me. No, he said, you don't understand. I'm losing money because I can't trade the stock market. You went to third grade, not in this country. You barely speak English. You can't write it. And you're telling me you're trading the stock market. Yes. So we went on, talked for a little bit. I got the information of the company that he went to. I bought the course full retail because I wasn't waiting for it to come back. Didn't have it. I put it on 7 different credit cards, 6 or 7 credit cards it was. We paid for it. So my wife knew nothing about it and didn't tell her what we spent. Went to this training, came home so excited, told friends about it. They're like, you're nuts. You can't do this. You're not a smart guy, which I don't have I'm not a brainiac type person. I'm a C student in school, which I made it through school. I graduated. That's all I cared about. On time, graduated. That was good enough for me. And friends were no. I started telling family about it, coworkers, anybody I could talk to at that point, and they all shot me down. I'm going to lose all my money and so forth. The last vestige was my dad. I call him. He lived in Florida. I'm in New York. And I told him what was going on, and he went off on the phone. He lost it. Like, what's going on? He goes, our next door neighbor, he lost every bit of his money. All his money was lost in the stock market. You're crazy. You can't do this. Your family's at risk. You got a good job. And he went on and on and on. Now, come to find out, that next door neighbor gave $10,000 to a futures broker who did a churn and burn, where he just did it for commissions. He just kept trading to generate commissions for himself until he brought the account down to zero. So, and my dad was a smart guy, a VP of an electronics company, big company worldwide. So, but his ignorance, and he later in life admitted it, his ignorance of just not understanding what the market was what caused him to have that opinion to it. When my wife realized what I had done and what I had spent, and she said, you've done so many harebrained schemes before. This is it. If you don't make this work, we're done. So I had a real incentive to make it work. She didn't talk to me for a couple of weeks, and my office was in our basement at that time. And she comes down one day and asks me something, which was anything was great because we weren't speaking. And she looks over my paper trading, which at that point, back in 1997, was literally on paper. There was no platforms, computers, paper trading accounts. They didn't exist. One sheet, one trade. And she she turns the paper and she goes, you did this trade and you made $2,000. So it's on paper. Turns it. You made $4,000. Turns the page. You lost 500. You made 3,000. And it's anything for her to talk to me, right? And then she looks at me. She goes, "Why aren't you doing it for real?" But I've got to get
See,
the
money does
system.
interesting things. It soothes
Yes.
so many areas of our life. You told me once that this actually saved your marriage.
It did. I was headed down a really bad path, doing some things that I should not have been doing in life, hanging out with the wrong people and the wrong attitudes. And they tell you, find your 10 closest friends, add up their income, divided by 10, and that's about what you make. That was me. I needed some new friends, and this propelled me to get out of that, to the point that 6 months after I took my class, I was able to quit my job.
Look, I think the lovely part about trading is it is a pure equalizer. It is an equal opportunity employer, and it rewards the levels of discipline and focus that you bring to it. And it is so rare to find that level playing field these days. What about staying involved for the long term? So I've been trading since 1990, and I finished up with employment. Well, they finished with me in 1996. And in 1997, I produced my first book about the stock market, because I'd been a full-time option trader for about 2 years at that stage. And then,
Mhm.
of course, I moved into other areas, because you don't just want to get stuck into one area.
Right.
I think lots of opportunities. If you've got the skills, you can duplicate it across different markets, different timeframes. Tell me about how you stay motivated for the long term.
So it's interesting. I've taught, as we've talked about, I've taught for multiple companies in the past. I started wealthbuildershq.com back in 2017, not by choice. The last company I had been with had was closing their doors. They decided they didn't want to be in the software, stock market education software business any longer. And I decided I was just going to go back and trade full time. I'm having lunch with a very good friend of mine one day, and he said, "So what's next? You're going to start your own thing now?" And I said, "No, I'm done. I don't want to put in that kind of time." And he goes, "Wait, what do you mean?" And I said, "Well, I'm just going to trade full time now, which is a couple hours a day, and that's it. Be done." He said, "Let me ask you a question. Do you think you've ever helped, one time ever, change somebody's life in your events, in your seminars?" And I said, "What are you asking me? We've had this conversation." I said, "There's never been a seminar I've taught that I have not changed somebody's life." And he said, "And you think you've got the right to quit?" Man, I
Mm.
hate you.
That really strikes to the heart, doesn't it?
Oh, it did.
Yeah.
And when, we had a comment today that someone had put in. I said something, I had to go off to a physical therapy today. Oh, my shoulders bother me. First visit, I'm going to leave a few minutes early from our training. I got out of there 5 minutes sooner than I normally do. And the woman that typed in, she's in our mastermind group and others programs. And she typed in, "We love you so much. Don't ever go away. What you do for us and the things you do for free and what you give back is amazing." And when you look at staying in it for the long haul from an educator standpoint, that's it. And Louise, when you touch someone's heart and you can change their life, and you're written in their history forever, in their family's history. They say it takes 3 generations to change the family history. Mine was changed in one. We were headed down a
Yes.
bad path, and this changed our lives. My kids, they don't know. I mean, my oldest daughter wanted to be a vet. In the U.S., the vet at that time when she was going to school made about 180 grand a year with a couple of years experience. She had to do some research for her school of what she would make, and she comes back with this piece of paper in her hand, and it's down by her side with this long face. "What's wrong?" She goes, "I don't know how I'm going to live on making this." And that's because she knows what we do with our businesses as a trader and so forth. And she knows we make, just a little bit more than that. And she doesn't realize how good it is, but it's not what you do for yourself. And I plan on doing this for the rest of my life. My wife
Mm.
knows I don't have a reason to retire. I need a computer, internet access, and I'm done. That's it. I don't
Yeah.
have to be anywhere in particular. I could trade any market, anywhere I'm at. I can learn a new market if I have to. Bring on the Bitcoins or anything else. We can trade anything that happens out there, because once you know it, you know the system, you can transfer that into any marketplace.
You can, because you carry it with you between your ears. It is so liberating. Actually, my children have never known parents who've worked outside the home either. They've never known that whole everybody goes to work, everybody comes home, then dinner gets cooked. We just kind of gradually intermingle our lives with theirs, and it's so nice. They want to hang out with us, they want to spend time with us. I look at a lot of teenagers and early 20s type of family age groups, and they just don't want anything to do with their parents. So I do feel that really the markets have just been so generous, and they will continue to be generous. It's just rewarding the people who put in the hard yards, put in that work and the discipline. I want to talk about some specifics. I've got a lot of traders who are listening to the show right now who are interested in trading the US, but they haven't actually dived in. So I trade US equities, ETFs, sometimes options, but definitely in terms of indices, what indices should people be looking at to trade the US effectively?
So when it comes to ETFs, so we're all on the same page. There are two that I trade and look to trade every day, and that's the SPY and the Qs. And in the US, we now have the ability to trade the options on those with an expiration of today. They expire 5 days a week, as you know, Louise. They expire 5 days a week. So I love those two indices. From a standpoint of the stocks inside of those indices, I tend to be higher focused on tech than I do on blue chip. So my top three today are Tesla, Netflix, and Nvidia. Those three would be the one. They're my go-to every day. They're the first ones I look at. We have a very short-term day trade strategy, in and out. Usually it's 10 minutes to an hour, maybe an hour and a quarter. And we're out of that trade. It just, the pattern will tell us when it's time. We're not going after a dollar goal. When the pattern stops, we're out.
I'm loving that. So many people put a cap on what they can achieve. And I agree. I think once the trend is over, then you exit. You don't tell it when the trend is over because it doesn't listen to you.
Correct.
Yeah.
Correct. We had a trade in one of our programs, excuse me, and I called these trades out in advance. And, our setups are very simple. We use a methodology similar to what you said before, but I use something called strategy creation system as our trademark for it, but it's identify, enter, manage, exit. Those 4 keys have to be part of any trading plan. You cannot have a trading plan, in my opinion, that doesn't have that in it where you can be successful. How do you identify the right candidate? What's the criteria for that? What's the entry signal? Now you've got it. Apple's on my list. How do I know it's time to enter Apple? When I'm in, am I scaling in? Am I scaling out? What am I going to do to manage this position? And ultimately, what's my final exit? The final exit could be 4 p.m. Eastern when the market closes here in the US. It could be based on a target and hit a resistance level. We have a resistance level, and our target is either somewhere down below that resistance level or a time exit. We have a way of getting out at the end of the day. So if we didn't hit that price point at the end of the day, at 345, I'm out. I don't want to be there. I don't want to look at it. I don't want to think about it. I don't want to help mess my trade up because I am my biggest enemy when it comes to being in my own trades I'm going to say, oh, it's going down a little bit, get out. What did I just do?
Yeah, I've been there, done that. And look, I just want to tweak out what you've said here. So you've got a system that says identify, enter, manage, exit. That's it, isn't it? Now, that is gold. For everybody listening, that is gold. I would actually also, after the exit, add on another management. So why do we do this? Why do we look after we've got out? How can we finesse? We need to record things like what is the price and the average return that we're getting from different price points? Do we have a sweet spot? Look at our equity curve across different archetypes, that ideal type of trade that you're looking to duplicate. If you've got like a breakout trade, if you've got a retracement trade, maybe there's a V reversal trade, are you following a particular archetype? And what is your equity curve telling you? Are you good at that archetype? Is there an archetype that perhaps you suck at that you need to delete from your collection because that will be dragging down your results and creating a drag and friction, which we don't want. So I do think management after you're out does help. And also the management has to come under two headings. One is management of the trade and how that fits in general to your trading, but also management of yourself. I think that is a real key. Were you comfortable in that trade? Did you act on the signal? Did you move that stop when you should not have? Did you stop looking at it because it was too painful? Did you keep looking at it because it was so exciting? How did you respond to that trade? And if you develop that in your trading diary over the next 6 months, you are going to have a resource that is custom made for you. What are your thoughts about that, Rob?
Yeah, I think you're spot on, Louise. I mean, we very much, I profess at the top of my lungs that trading plan should not even be a consideration. You are making a mistake if you don't have it documented. You could talk about it's up here in my head, and maybe it is, but McDonald's doesn't keep the secret sauce in their head. Okay, it's written down on paper somewhere. The whole business plan is, so we need to have it down on paper as well. So I agree. I think documenting your trades is critical. I have a training that I'm doing this evening with one of my groups, and we trade 20 stocks. We look at the S&P, the VIX, and 20 stocks, the same 20 stocks, at least for a quarter. And then we manage them. So I'm actually looking at them over this evening for the first 9 months of the year. And Apple is one of our stocks. And come to find out, on 20 stocks, it's real simple. We should make about 5% of our equity should come from, if you average it, should come from each stock. Apple produced 1.2% for us, which says Apple is not a good stock for the amount of time we're putting into it. In the entire first 3 months of the year, with the 9 months of the year, sorry, with 450 trades having gone off, we did 9 trades on Apple. That's a problem. So by managing them, or documenting them rather, using your term management, we're able to see, you know what, this one doesn't really fit. Whereas a Roku, who had the most number of trades for us and was probably number 7 or 8 on profit for a stock that is $80, right?
Yeah.
Would not have guessed we did anywhere near that number of trades on Roku.
This is the thing. It is extraordinarily difficult unless you document to actually remember what in the heck was going through your head in the first place. It is so essential to write it down. Now, just back onto the US. So my method for looking at the US is I use relative strength comparison, and I compare the Australian index, which is the All Ords, or it can be the ASX 200. They're fairly interchangeable. I compare that with the NASDAQ, with the S&P 500, and with the Russell, because I'm trying to find my sweet spot to guide my focus so that I'm into the highest probability trade. So if the relative strength comparison says that Australia is outperforming the US, then I'll invest in that week for Australian stocks. If the US is outperforming, I have one extra layer, which is to look at the currency, because of course we have to do the currency conversion. Oh, Rob, you are so lucky to live there. That currency conversion can foul up a perfectly good setup and trigger. So looking at that currency has to be the next step. But then I've analyzed which is the best universe for me to be involved with this week. And that is sacrosanct. That is my top-down approach. And I do not deviate from that universe for that week. Now, I want to talk about support and resistance. I think support and resistance is the unsung hero of our technical analysis toolkit. I use it so much, and it is interesting when I see people try and use it. Sometimes they don't understand the importance of it. So just to define, support is where the prices come down, we have buyers creating pressure, buying pressure, and the price comes up against that line and then retraces and then goes up. Resistance is where the stock is hitting its head on a particular price, it has trouble going beyond that price, and then we're looking for something like a breakout to go long in the markets. Now, I'm curious, Rob, what are your thoughts about support and resistance?
Okay, so boxing gloves on.
Ah, here we go. You know, I'm hoping, I'm surprised I haven't found more. I tried to purposefully be antagonistic with this.
Actually, they're not really. They are, but they aren't. So do I use a traditional support and resistance? Yes. I mean, I am very famous with my group for the phrase of look left. Make sure you're looking to the left side of that chart for other areas of that support or resistance that we run into. But for myself, Louise, I am very heavily a Fibonacci trader. Everything that I do focuses off of Fibonacci. And I mean, I do everything I can in life based on it where possible, to the extreme where I get on the third, the fifth, or the eighth treadmill and not the fourth or the sixth. Just they got to be better machines, right? They're in tune with nature.
I love that.
But I digress. I use the Fibonacci levels as support and resistance. And I am a very, very, very big fan of not taking a trade that does not bounce off of a Fibonacci level. And ideally, there's a confluence of one of my two major moving averages at that fib level for me to want to take that trade. And if there is, we take a full boat or a full size trade, which for math purposes, we just say 10 contracts. Okay. If I don't have the confluence, I take what I call an aggressive trade, which would be 4 contracts. So we take less. I still want to participate, but I'm not willing to put a full amount at risk on that trade.
Look, Rob, I could talk to you all day. I have loved having the boxing gloves on with you, but as a listener, just remember to look for the things that you find resonate for you. This is the key. We are two traders from the other side of the world from each other.
Literally.
We've got different methods, but each method can work if it's in alignment with your values and your trading plan. Now, Rob, where can people get in touch with you?
So you can go over to wealthbuildershq.com. You can find us on the Stock Market Millionaire podcast. We are on every major social media platform out there: Facebook, YouTube, Instagram, Twitter, or X now, right? Yeah. But the easiest way is to go there, to go over to wealthbuildershq.com, and you'll find a free training we do each and every Monday, which is jam-packed with pure content. There's no fluff. We start off with an analysis of the market. We look at stocks that we traded for that day. We look at stocks you want to trade. And then we have an educational component that we teach on a topic, as today's was trading a small account.
Oh, magic. That sounds fantastic. And for everybody who is used to listening to Rob, and if you'd like a bit more of listening to me, you can come over to tradinggame.com.au and pick up your own free trading plan template. So in that template, I give you exactly what you need to be able to formulate your own trading plan like a professional. So tradinggame.com.au. And my podcast is talkingtrading.com.au. So subscribe there as well. And Rob, you are a superstar. I would love to have you back on the show at some stage. You are fun. You are insightful. I'm so glad we are in contact. Is there any parting word that you'd like to say?
I think every trader has the opportunity to do great things. It's within you. None of us were put here for mediocrity. I think it just comes down to, are you willing to take the steps necessary, follow things that you're saying, Louise, and move forward in your trading to become successful. And thank you for having me on. I'd love to come back again.
And how lovely that we've been able to do a simulcast. I think that's fantastic. Two podcast hosts grilling each other with the boxing gloves on. It's been magic. Good. Alrighty, we will wrap it up there and tune in next week for the next exciting episode of each of our podcasts. Bye for now, Rob.
Take care now.